Today we're talking about bad credit and how it is very similar to the prison system. Let me repeat. Bad credit is similar to the prison system. It is by design. We're going to talk about that today and also offer you a couple of solutions that you can work on if you find yourself with some credit challenges that you need to get yourself out of. So stick with us. We're going to get started right now. Welcome back to the channel, everybody. Happy New Year. We've been gone for a few weeks, but today we're talking about bad credit, challenge credit, and how it is very similar to the prison system. Now, let's take the prison system, guys. Like, listen, this stuff, everybody knows this stuff, right? So basically, once you get labeled as a felon, and then you get out of prison, go try to get a job. It's very difficult to get hired. It's kind of like you have bad credit, right? Like you can't get anybody to give you a chance. And so that system, in my opinion, is basically designed so that you end up going right back into the system or having to go do some type of a job or rationalize life away until you go back to prison. And it's just it's a vicious circle. And so the credit system is very, very similar. Once you have a 500 or below credit score, nobody really looks at you. Nobody wants to give you money at a fair price. Nobody wants to work with you. Sometimes it affects your job. Like they have jobs out there, Secret Service, you know, a lot of these high-end government jobs, some financial planners. Like you can't have bankruptcies on your credit report. So, you know, people are looking at that. I don't know if you knew this, but it also affects your insurance rates. It's one of the main factors in your insurance rates when you're driving a car. Your credit. So people don't pay attention to it, and it's by design to keep you there. So when you think about the people that have the bad credit, they're paying the higher insurance rates. They're paying all the high interest rates for loans. They're never finding a way out. And then they start rationalizing things that we're going to talk about today too in this video. They start thinking that this is normal, this is what I need to be buying because this is all I can get. Now let's talk about that. So you have, let's say you got yourself in some trouble. You had a medical issue and your credit got hit, and now you used to have a nice car, and now you're in a bad credit situation. So you go to the dealership and you try to buy a car, and your credit doesn't stack up, but they have some people there that will help you. I have had many people that over the years were like, oh man, these guys are so good to me because they give me credit. I'm like, you know what? They're not your friends. Paying 23% interest is not friendly. And the only reason they're doing it is because of all the interest they're able to make on that particular loan. And they pretty much know that you're going to default, they're going to get the car back, and they're going to reset and do it all over again with the next client. So keep in mind, I'm not saying that they're your enemy, but these guys are not your friends and aren't helping you. They're getting the car deal done. They're giving you the highest rate possible, because that's where you have yourself, and you've gotten yourself there with that 500 below score. So that's one thing. However, they're not telling you the whole story. And so part of the story is this: like you could have bad credit and sign up for a 23% loan. And people may not know that you can refinance that loan after you've been in the vehicle for a couple of years. You've been making payments for a couple of years. This is part of the solution situation we're going to talk about later, and what you can actively do to work on getting yourself out of this situation. But let me finish painting the story about the bad credit being similar to the prison system. So you find yourself with a 500 score. You try to buy stuff. Nobody will sell to you anymore. Your credit cards are maxed out. You can't really get ahead. And so the thought processes start to change. You start thinking about, maybe I can finance this old car that I see at this dealership for 60 months, even though it already has 100,000 miles on it. So you start doing that, and those cars never make it to the end of the loans. So you get the high interest rate, the car starts breaking down later on. Nobody wants to make a high payment on a car and have to fix it. And so you end up not fixing the car, maybe defaulting on the loan again, and back to square one. All of these things to me seem like they're just by design. And there's ways that you can try to avoid them by seeking help and by making some small little decisions and sacrifices to help yourself move forward. Now, I've seen this over and over again where folks are driving an old car. Like, you got friends that have cars that are 10 years old, but they still owe 5 years on the loans. There are 3 years left to pay on these cars. They've had some credit challenges, and they're still trying to get ahead. So The first thing I would want you to look at is, your specific loan that you have right now and how long you've been in it. And just write that stuff down. Like, all right, I've been in this loan for 2 years. I've made my payments on time. And so this is where we start to fix ourselves. If you can't say you've made your payments on time, that's the first thing you can do. Is get yourself set up on auto pay and commit to making those payments on time, because that's going to do a lot for your credit. Just the steady consistency of making that payment on time. It's the first step to getting this thing fixed. So after you get your payments on time and you're making payments on time consistently and you're feeling really good about that, the next thing you can do is call the bank that you're working with. Like whatever bank you're making a payment to on the payment slip, give them a call and say, hey, I've been making my payments on time. Do you guys have any more favorable rates for me? Is there something else we can talk about? I'd like to continue to work with you, but I would like a better rate. And so we're just going to listen to what they have to say. Maybe they send you some stuff in the mail. Maybe they have a loan officer call you. Whatever it is, you're going to talk to them and say, hey, look, this is what I want. Guys, you got to be strong enough to just pick up that phone and make these phone calls. These phone calls can help you. Worst case scenario, they're going to tell you they can't do anything for you and continue to make your payments. So that's fine. You want to keep making your payments, and then we can start to shop this loan around. So the second thing you want to do is look up the value of your car compared to how much you owe. So while you're on the phone with that bank and they're telling you, no, we're not going to change your terms, how much is my payoff? Then take out your pen and write down your payoff. Let's just say it's $20,000. So you're going to write that payment down. Then you can go to NADA.com, NADA.com, and look up the clean trade value of your vehicle. There's going to show you a lot of values in there. You want to look at clean trade. So when you get in there, look at clean trade. If it says $22,000 and you owe $20,000, good for you. If it says $12,000 and you owe $20,000, it's going to be a much more difficult situation. But right now in today's market, your vehicle, you may not be upside down, meaning the loan to value ratio is good and favorable for a bank. So you want to get that information and write it down and have it in your head so we can make the next phone calls. Now, these next phone calls are going to be to credit unions in your town. Ask your family members, what credit unions do you guys use here in town? Which one's the best one? Who's the biggest one in town? Make yourself a list of about 5 of them, and then get on the phone and start calling these credit unions and say, hey, I would like to refinance my car. Most people don't know that refinancing your car doesn't cost you the type of money it does when you're refinancing a house. When you're refinancing a house, it could be $3,000, $5,000, $6,000, $10,000 in fees. Vehicle loans do not work that way. So you can get on the phone with the credit union or go online if you don't want to get on the phone, put your information in, put the vehicle value in, put the amount that you're looking for. Maybe they ask for the VIN number, miles, whatever. You want to put that stuff in and wait to get those answers back. And if you have 5 of them, you'll start getting these offers. Like you may be at 23% right now, and one of the credit unions says, hey, good news, we'll approve you, but we want to be at 13%. So now we've just made what is that? It's a 10-point drop, right? So you go from 23% down to 13%, and your payment's going to change, and you're going to pay less interest over the term of that loan. One major thing to keep in mind about this, if you're going to refinance, do not stretch the term out. If you had a 60-month loan in the beginning and we've paid on it for 2 years, you're down to 3 years left, right? 36 months. So don't go and ask for another 60-month loan. It's going to be tempting because they're going to say, oh, the payment's only, it's $100 less at 60 months versus 36 months. Remember what you're trying to do. You're trying to get your credit built back up. You're trying to get out of this situation, this big circle that keeps going round and round and round, right? So do yourself a favor. Look at the payment at 36 months instead of 60. So let's talk about people that may be in a situation like your credit's taken a hit. You had a major surgery. It wasn't covered by insurance and your credit's down. We know that bad stuff happens to good people, guys. Just because you have bad credit, by the way, it doesn't mean you're a bad person. It just means things got challenging and maybe some bad decisions were made. But however, we can fix this stuff. So let's say you're in the situation right now where your car's totaled, you have bad credit, and you have to get a car. What can you do? Well, the first thing I would look at is leasing, because it's easier to get approved for a lease in specific makes and models, and you can get a cosigner for that particular lease to help you get approved. So I talk to people all the time about this, and they're like, well, I don't have a cosigner, I don't want a cosigner. Have you asked anybody? You know, you're asking me for credit, but you haven't asked your cousin, your aunt, your uncle, people that live in the same town. I want to explain to you how much easier it is to co-sign for a lease than it is a regular loan. So when you sign up, when you have a co-signer for a regular loan, most are looking at cars that are out of warranty to start. And so you want a 5-year loan on a car that's already out of warranty. You want somebody else to co-sign on that loan in hopes that you make every payment and do right by them and nothing goes wrong. But all your credit says that's not going to happen because you have a less than 500 score. So you're asking people to take a big stretch. They're going to be thinking after 2 years, what if the car breaks down? They can't afford to fix the transmission and keep making the payments. Do I have to make the payments? Possibly. Possibly. I mean, all these little things that can arise to cause you and that person that co-signed issues. I use this for a lot of parents. Parents that come in and they want to buy $5,000 cars, $8,000 cars. I'd rather see them get into a lease for $300 a month for 3 years on a brand new car and add that child that's 19 onto that loan so that 3 years goes by. Now the child's credit is just as good as theirs because it's been consistently paid. And if you've got your pin out still, $300 a month times 36 is what? You know, 300 times 36, $10,800. So instead of an $8,000 car, we just spent $10,800 over 3 years, but that car is guaranteed to be under warranty for the whole time. Transmission breaks, no problem. Still just make the $300 payment. Engine stops working, no problem. Still just make the $300 payment. Somebody else is responsible for fixing that car, the manufacturer. So for you, if you've got yourself in a situation where you have challenged credit, I plead with you to talk to your friends and family and explain this to them in that way. Listen, I need you to co-sign for me. I'm going to do right, but we're going to do a lease. Payment's going to be less. It's only going to be 3 years. And the car's going to be under warranty for the entire time. So all we're responsible for is making the payment and doing the maintenance on the vehicle. Anything that breaks, we are good. So if you haven't looked at that aspect, you should definitely look at it. For those of you who like the content today, please like and subscribe to the channel. We're going to be coming back to you, if we can, every week. We're doing our best. We've been really busy. And we've got a lot more stuff to share this year. We're moving into a new building. The last video I did was in December, and I said we had an announcement. That's my announcement. We just bought a building. We're going to be moving in there. We're going to continue to do YouTube videos and continue to run our business. And if you got specific questions you want to talk about, put them in the comments below. Check out the other videos that we've got on the channel, and thanks for watching.